Welcome to a new year, everybody. We thought we'd start off with a great conversation with Jill Nowacki, the CEO and founder of Humanity, about what credit unions are doing from a talent perspective, how they're recruiting and developing that talent, and how they are readying the organizations and those people for the future. So if you're ready, let's suit up and get out on the field. Jill, I'm so excited to have you on the episode today. Thank you very much for joining us.
Thank you, Kris. I'm thrilled to be here.
Excellent. For those who don't know you yet, why don't you give a little bit about your background and tell me what your company Humanity does?
All right, thank you. So I am a credit union lifer. I started my career in credit unions in 2001. At the time, I thought, I'll probably do this for a year, and then I'm going to go do something that really matters, or public relations for an NFL team. Either way. And ended up in a situation where I loved my first job with credit unions. I was able to do marketing for Montana's credit unions through their trade association in Montana. And by the end of that first year, I had my little bit of experience under my belt, but I also really believed that credit unions were an amazing tool to change lives and change communities. And so I was hooked and stayed with it then for another, so far, 23 years. Had the chance to work in a natural person credit union, leading the Credit Union League of Connecticut, and even working at the National Association during that time as well. Humanity was founded about 5 years ago now, in 2019, a little over 5 years ago. And we started because I was working with a lot of credit unions in my role as the CEO at the Credit Union League of Connecticut. And I kept on hearing concerns that credit unions were becoming just another commoditized financial institution. And when you go back to how I got hooked on credit unions and what I believe credit unions are capable of, that didn't work for me. And I felt like the heart of that was that if we could get the people side right in credit unions, we would continue to really pursue that mission. But we were only going to get the people side right if we were really building inclusive workplaces that were attracting and retaining talent that was reflective of and deeply connected with our memberships too.
Mm-hmm. So the services Humanity provides credit unions are recruiting and training. Is that right?
That is a high level overview. Yeah, it would work that way. So we say we do, anything that touches the people operations space of it. And we define it as talent attraction, which is the recruiting, development, which includes leadership development, executive coaching, training, but also creating inclusive workplaces through diversity, equity, and inclusion consulting. And then retention, which includes working with organizations to make sure they have, compensation that aligns with market, and as well as career path planning, which can be part of development, but also is part of retention. When people know they have a future with an organization, they're more likely to look to stay at that organization.
That's right. That is certainly true. What type of leadership development do you offer for credit unions and for their staff?
Yeah, we have several different areas that we're certified in as a team. In fact, I'm back to school right now, getting my DISC certification and my Big Five certification, which are programs people are pretty familiar with. We do already have talent on the team that is certified in DISC training, Big Five, emotional intelligence. And then several of us are certified in a tool called the Harrison Assessment, which is a predictive analytics tool that looks at how successful a person might be in a job, but it also helps us to look at teams and the strengths of teams and to bring them together with that. So those elements of training really helping to build leadership skills and really helping to build team dynamics in a way that can create greater success, whether that's team dynamics for emotional intelligence across the culture, or just improved communication, or even strategic thinking and strategic leadership. We also do training specific in the diversity, equity, and inclusion space as well, which is a little bit different than that leadership training, but also critical in creating those inclusive workplaces.
How do you think the needs of credit unions have changed since you started Humanity in 2019?
So that's a great question, and what a time to start a company, right? 2019, because clearly I had there'll be a global pandemic next year on my bingo card for that one. But it's it's fascinating to me, and from like an anthropological, just like
Mm-hmm.
looking at it, in some ways I think, wow, that was maybe, had I had a crystal ball, not something I would have done in 2019 to start a company. On the other hand, I'm like, how exciting and fascinating that I got to start a company focused on both diversity, equity, inclusion, and workplace practices on what I think was the cusp of the biggest changes we've seen in the workforce and the workplace in like modern times. You know, I'm not sure that we're talking about more innovation than the assembly line here, but definitely
Mm-hmm.
some big changes in the workplace. And so in 2019, when I said I'm going to go start this company, the company is going to be named Humanity. DEI is in the name on purpose.
Mm-hmm.
I was having a conversation with another leader in the credit union space, and she was supportive, but said, "I'm concerned that people aren't going to know what DEI is, and you're going to have to really work on that education." And I said, that's the business plan is built. So that whole first year, like through 2020, is really going to be spent more on getting out, educating credit unions about
Mm-hmm.
what DEI is, why there's a business case for it, and moving that forward. And of course, we move, and why inclusive workplace practices matter, including flexibility in the workplace. So we of course then move into 2020, and we all got forced into flexibility in the workplace
That's right.
with COVID and work from home, and not just work from home, but also the, okay, you're working from home, and despite the fact that our policy says you can't work from home if there's a child under 13 in the home, your kids can't go to school too. So, and they can't go to daycare, and they can't. So you have to navigate this where our policies may prevent what actually has to happen in the workplace from happening. So we're all working on that. And my first thought at the time was, gosh, all of these, you know, things that are nice to have rather than needs to have, workplace culture, diversity, equity, and inclusion, those are going to take a back seat while people just figure out how to keep the lights on over the
Right.
next several months. But what we saw instead was that the people who were like, I can't, like, people had such a, I think it's fair to say, crisis of mental health, but like there was such a weight on people during that time that we couldn't say just stay focused and get the job done. We couldn't be task oriented only. We had to create, we had to pull our emotional intelligence up
Mm-hmm.
to the highest levels it's been, so that we could create that more, an environment where people could continue to function.
Mm-hmm.
And then we layer on top of that, in May of that same year, the murder of George Floyd, which
Mm-hmm.
also brought a heightened attention to issues of diversity, equity, and inclusion, and called businesses to actually address how they were creating more inclusive workplaces from that side of it too. So those were all happening in 2020 within that first year of starting Humanity.
Right.
And we've seen since then some ebbs and flows. We
Mm-hmm.
continue to see the challenges of well-being and mental health in the workplace, with everything happening at this really fast pace, and trying to help people keep up with the pace of
Mm-hmm.
change that we've seen. And as we always do, since the 60s, we've seen ebbs and flows with diversity, equity, and inclusion work. And right now we're in more of a period of backlash than we are full court press on that, like we were in 2020.
Sure.
So we're seeing changes in that area too, as far as what credit unions need.
Yeah, I see it as kind of reaching like an equilibrium, right? And then, it'll, like everything, it flows a little bit, to kind of maintain an equilibrium. What is important is, are we making the impressions on the companies that are long lasting,
Yeah.
right? And being able to do that. Um, how do you think? How do you think that's changing as you look forward, right? As you're looking forward into 25 and 26, this is the very first podcast we're doing for 2025. What do you think the future holds for, the future challenges that credit unions are going to have in recruiting and developing talent, and building workplaces that are inclusive? What do you think those
Yeah.
challenges will be?
For in 2024, like strategic planning session season in 2024, as I was looking toward the future, I actually created my own, just based on my own experience and
Mhm.
theory, like hierarchy of human expectations. And what I see, and I specifically or intentionally called it human expectations, because I think often we try to say, oh, here's what our consumer expectations are, and here are our employee expectations. And like you and I, we're both employees and consumers. Like there's not a separate class of people that are just consumers or just employees most of the time, where we
Right.
tend to be both. And so, but I think as credit unions, we have this history of saying, okay, consumer expectations look like this. And one of them, just as an example of this, consumers expect frictionless opportunities. They
Mhm.
want us to remove pain points, remove points of friction. We have to do that for our consumers. And then in the meantime, so I'm going to create this member facing experience where the user experience is that with one click, you can open an account online. But behind the scenes, the employees are taking 27 different steps in the
And
core,
doing it
right?
manually.
Yeah. So that you have this perception of this
Right.
frictionless experience.
Right.
And what we're seeing, like the employee side of that, they're like, yeah, no, I don't want to work at a company. We're like, my job shouldn't be that hard. Like I
Right.
expect a challenge. I expect to have to think critically, but I do not expect to have to do all this work for
Mhm.
something that should be
Mm.
frictionless from that side of it. So that's just one of these examples of places where we've maybe looked at it one way from
Mhm.
a consumer standpoint and haven't given it the same thought on the employee standpoint.
Yeah.
And so that hierarchy I built said, okay, sort of first and foremost, human expectations are that like you keep me safe. So whether it's me as a consumer and you have my data and you have my money, you have to protect that and keep that safe. But me as an employee, I should feel like I can come to work and not worry about being harassed or discriminated
Mhm.
against or talked to meanly from the member who's coming in to deal with me. Like I should feel a certain level of safety
Mhm.
when I interact with the organization. And then once we get that out of the way, then it's that, okay, it should be a frictionless experience. It should be,
Mm.
there should be some ease in working together. And then it should come into like, there should be a really customized personal experience that comes into that. Like
Mhm.
you should know what my needs are. Don't, if I'm a 20-year-old or 22-year-old with $100,000 in student loan debt, don't send me a mortgage offer because that's probably not my next move. Like, help me figure out
Mhm.
something else. But from an employee perspective, customizing this experience for me, like, if I have to pick my kid up from daycare at 6 o'clock, don't make me close the branch that closes at 6 o'clock because I can't be in both places at once, despite the
Right.
fact that I want to. So, can you customize that too? And
Right.
then finally, kind of that tippy top of the hierarchy is keep my best interest in mind. And
Mhm.
so, from the consumer standpoint, they want to know you're not going to charge them unnecessary fees when something like, hey, if we reorder the transaction and do it this way, it actually won't trigger those 17
Mhm.
overdrafts on it. Do that for me as a consumer. From an employee standpoint, like keeping my best interest in mind, like if I'm doing something that's, if I want a promotion and where my gap is in that, you tell me the development I need to get there
Mm.
and give me those opportunities to grow and excel. Don't make me beg for the development opportunities
Mhm.
or the raise to like you come to me and say, hey, I noticed your compensation is not aligned with market. Let's true that up and get that right for you instead of
Right.
trying to get a good deal on the team member.
Right. Right. Yeah, that's it is interesting to me the different like I think we're in a generational change, right? Because you're much younger than me, but as a Gen Xer, right, it was very much like you've got to go out and figure it out, right? I had
Yeah.
this conversation once with a fellow employee who said to my boss, why is Kris getting all of the development assignments? Right? We were systems analysts at the time.
Yeah.
And why is Kris getting all the development assignments? And my boss looked at him and said, Kris knows how to program. And the employee said, well, if you had bought me the book, I would have learned to program. And I looked at him and I said, I bought myself the book.
Yeah.
Right? Like, I mean, there's a level of grit, you know what I mean, that builds as a part of going through that process. How do we give our rising employees the tool set, the skill sets to be able to advocate for themselves? Because I do think it's important that we as leaders recognize inequity and we put our finger on it and we solve that. But we also need people to take an interest in their own development, right? Like how does an organization balance that or give opportunities for that?
Yeah. We at Humanity created a product we offer that is career path planning. And it was actually an outcome of these voice of the employee focus groups we did with credit unions when we were trying to assess, what keeps this organization from being as inclusive as possible. And of course, 2020, when we started these voice of the employee research, clients were concerned that we would come in and we would give them a report at the end that said, you're really racist, you're really sexist, you're really whatever, right? And, or I got bullied at work. And that's not what employees were, most of the time, that's not what employees were telling us. If you have an organization that cares enough to look at their practices, chances are it's not a toxic organization. Right. It may still have some room for improvement, but it's probably not one where the isms are running rampant. Right. And so what we found was people were saying, the problem with this place is I just don't know how to get ahead. I just don't know how to move to the next stop. And I've applied for promotions and I've heard I didn't get the job, but I didn't hear why. And I didn't hear what I could do differently next time. And then when it comes down to it, I look at who did get the job. And it's essentially like we're getting this information is kind of going into this black box, the results coming out on the other side. And now I'm left to figure out what happened in that black box. And if I see, hey, the hiring manager and this person are golf buddies, or the hiring manager and this person take walks every day at lunch together, I'm going to think maybe it's because they're friends, or it has something to do with something other than my merit and my qualification. Right. And if I'm left with, hey, better luck next time, I don't know what to do in order to have better luck next time. And so what we found was that it was just it was a lack of clarity that was often causing these feelings of unfairness. And so a career path planning program that we developed it works with the credit union, and we look at every role in that credit union. We lay it out in a matrix so that any person in the credit union could say, okay, I see where my role is today. I'm a level 1 entry-level employee as a teller, but I'd like to get to a level 6 branch manager one day. So now I see that, hey, there's 5 levels in between here. I'm probably not going to be able to jump from teller to branch manager. What are the different steps that it would take in there? And so that's kind of step 1, is laying it out in the matrix. Step 2 is an individual doing a self-evaluation that says, here's where I am. Here are the strengths and competencies I think I have. Here's the job I want in 3 years. And so now it's like, okay, great. You think you want that job. There's also a guide that comes along with it. So the employee can go look up what are the skills and competencies a branch manager needs, and where are the gaps between those skills and competencies I have and those that the branch manager has. And then that document that the employee has completed becomes a guide to a conversation with the manager or with HR if they're looking to move out of it. So maybe I'm a teller, but I want to be a marketing specialist. How do I move to that place in the matrix? What's the difference between what I know now and what I will need to know in the future? And then putting that into writing, creating that plan. So if that teller does want to become a marketing specialist, what do they need to do, and what is the credit union willing to do for them to help them get there? So your colleague, he wanted to learn how to program. So what did he need? He needed a book. Is the credit union willing to commit to the budget for him to get that book and move forward from
book.
that? So
Best best investment I ever made in my career, by the way.
That's awesome. And I would say the flip side to that too, Kris, is that, you went out and bought that book separate from it. We have people in our organization right now. I remember when I worked at MAPS Credit Union, we were going to hire a community development officer. Yeah. And we wanted somebody who had some experience doing some advocacy work out in the community for nonprofits. You wouldn't automatically say, well, clearly a teller has that, but we happened to have this teller who had this whole side of her life where she was incredibly active with a nonprofit organization, going out and doing public speaking. And so she would have written that on her sheet of skills and competencies she had. And maybe the manager would have been like, oh, I didn't even know we had this latent talent. So from that same way, you're like, yeah, I know how to program. They're like, oh, we didn't make that investment in you, but that's right. Heck yeah, we'll leverage it to move forward and give you advancement opportunities.
That's interesting. Does the career pathing tool that you guys have, when you talk about, hey, here's the difference between the 5 levels between where you are and a branch manager, right? Does it walk up the requirements, like the basic JD requirements for the role, or does it profile branch managers and say, hey, by the way, yes, they fit these steps, but here's everything else they're bringing to the table, right?
It's we break it down into, we're trying to keep it a little bit simple because for an organization, an organization with 300 employees could have 150 different roles that we're trying to lay out on that and putting them all in there.
That's true.
And we don't, so what it might say is, okay, a branch manager, here's the experience, education, skills, and competencies. And so the difference in skills, like a skill, I don't know, cash balancing, cash handling, a competency, coaching, and so, and then it talks through. So that's the branch manager level. And then it might have some basic kind of business development elements like that somebody could look at. We do talk about from each level, there's a description associated with each level based on the organization. So maybe level 1 is individual contributor entry level. Maybe level 3 is you're starting to develop mastery in this particular function you have. Maybe a level 8 as we're starting to get into vice president. Now we're talking about you have to have your functional understanding, but you also have to have some organizational understanding. So you're not just focused on your vertical. You also have knowledge and awareness of how what you do impacts the overall organizational goals and have to be able to work from that side of it. So that's defined in the section of if you want to be a high impact strategic leader of this organization that's impacting the whole organizational future, you might want to be looking at a level 8 role. If you just want to come in and do your thing today and be an individual contributor, then you're going to have to stay below a level 5 in this case on that. Because once you do start to step up, that's more responsibility comes with those levels. So
that sounds like a perfect segue to talk about your entrepreneurship.
Okay.
Right? Because it was funny. I was having this conversation. The last episode was with Sam Paxson, right? And she was talking about this kind of journey from being in a safe world where you can be entrepreneurial and you can create things, you can be creative and all those things, but there's a paycheck every day, right? Versus being a business owner like yourself, right? That is can you talk a little bit about how you made that decision to take that step? And perhaps, kind of what surprised you on the other side of making that decision?
Yeah. So, and I will say I have a little bit, I got entrepreneurship with a cushion or a landing because I was going to do it. And I was like, hey, it's time. I'm leaving. This is what I'm doing. And I was the league president at the time. League presidents have strong collegiality with one another. And I happened to just be talking to Diana Dykstra, who was then the CEO of the California League, just as buddies. We were just chit-chatting about my future and my plans. And I said, I'm going to do this. And I hadn't really thought about it. I guess maybe I sort of knew, but hadn't connected dots that at that time, the California Credit Union League owned O'Rourke and Associates, which is a
Oh,
longtime recruiting firm in
I
the
didn't
credit union
realize that.
space.
Okay.
Yeah. And so when I told her I'm going to go out and I'm going to do this thing, and it's talent attraction, development, and retention in the credit union space, focus on creating more inclusive workplaces, she said, we own O'Rourke and Associates, and it's time for a bit of a reinvention with that. They need invigoration, they need energy, they need to do something that looks more like what you're talking about.
Uh-huh.
So if you do this thing, will you take O'Rourke and we'll do it in a partnership side of it? So that's how, for the first couple of years, we were actually Humanity and O'Rourke, because we had O'Rourke as our recruiting division. Now
Okay.
we are solely branded as Humanity. I have one legacy employee from O'Rourke. Her name is Frida. She's been there about 15 years, and she is all things knowledge and back office operations. And but the rest of the team that we have now, and there are 8 of us now on the team, have been, Humanity employees who have been added onto that.
Well,
yeah,
that's a fantastic story, right? Because a lot of people would have thought that you're starting from the ground up, and it's like I had to, and you probably did. We were talking about having to go get an EIN number, and like you were in the very early days. Right?
I got to skip that. I got to skip getting my EIN because we just took O'Rourke's EIN. I didn't, and then we use, part of the collaboration of the credit union system, we use Plexity for our back office. Yeah. So I also was able to kind of move, and I had used them at the Connecticut League as well. Yeah. So kind of like a fun, like my controller for Humanity was the same controller I had as the league president in Connecticut. So I got continuity on that too, which again, like there's still so much, we reinvented the product lines. We reinvented how we do services. It's an entirely different team today than it was then. So very much a lot of those creative and exciting and sort of moments of that was me filtering myself. I wasn't sure if I was allowed to swear on it, but about like being an entrepreneur.
Cuss like a sailor on this pod. Trust me. You should see Jeffrey Stahl when he comes on. Holy cow!
But yeah, there's those sort of oh shit moments that come. Like still had all of those, but then also had it with a little bit more just like and your controller knows what she's doing, and your EIN is already established. Yeah.
That's a wonderful story. That is a wonderful, unique entrepreneurial story, right? Yeah. And I think there are some people who, when they think about entrepreneurs, they think about kind of, I had to start from ground zero and move forward. And the reality is that in our industry, where credit unions are willing to share and they're willing to contribute and participate and do those things, there are unique models that can develop. That's really very cool. What was the biggest surprise on the other side of creating Humanity?
It still remains a surprise. So I came from, working in credit union leagues, working in credit unions. And there's and it's funny because, you got to love the algorithm of what hits you with different advertising and stuff. And so now I get all these like LinkedIn sponsored ads about the feast and famine cycle of consulting, which it's like, it absolutely will go, like there'll be months where it's like, oh, like I haven't been home in 17 nights, right? And then I've been all over the place on the road. And then there are times when it's like, oh, it's quiet now. And so kind of figuring out the cycle. And, interestingly enough, there's a lot of lessons I can learn. Like we always would cancel our August board meeting for the credit. We finally just stopped having an August board meeting because in New England, you only get 2 months of sunshine. And so everybody like takes that time off. And so it was like, we couldn't get a quorum if we did a board meeting in the summertime. So we just canceled one of them. And so you see that, like, I know that credit unions aren't bringing me in for training in the month of July. They're just That's not going to. And so to be able to say, okay, I can make some choices about like how we run the business and when I take my time off based on those elements. I also know a large number of credit unions are going to want to do an all staff training that second Monday in October,
Mhm.
and
Yes.
so we might not take that day off as a federal holiday, despite the
Right.
fact that it is a federal holiday, because we know we have credit unions that are going to want us in
Right.
and doing leadership development training then too.
Right.
So that the ebbs and flows of it, I think, have really been the biggest surprise, and then it's
Okay.
not as smooth as saying, all right, we're going to invoice all the credit unions for their dues dollars in October,
Mhm.
and we'll know our budget for the year. But the surprise isn't just that, the fluctuations of the business cycle.
If I asked you what you know now that you wish you would have known then, is it this, or is it does something else come to mind?
I think from an entrepreneurial standpoint, this kind of like, there are going to be peaks and valleys, and at the end of it all, it's going to be pretty smooth. I think
Right.
would be helpful, because then I think it's just it kind of calms that sense of like panic or urgency that might come with
Mhm.
that volatility from it. So from an entrepreneurial standpoint, I would say that. From a standpoint of like working with credit unions and clients on
Mhm.
it too, I think I've also learned some lessons along the way about really what makes an ideal client for
Mm.
humanity. And I think that's also part of maybe what I wish I would have known that
Yeah.
a little bit sooner too, I think.
Yeah,
So
I think when in those early days, right, you're casting the net as wide as you
right.
can, right?
Right.
Because those valleys are a little bigger than the hills, right, when it comes to business. So
Right.
you're trying to cast that net out wide, and you end up with some fish, and you're like, yeah, I didn't mean to catch that one.
Right, right. Like, oops. Yeah. So,
Well,
yeah.
you want somebody who aligns from a values perspective, right?
Yeah.
Who is committed to being able to do that. Um, so it's been 5 years now, right?
Mhm.
Or approaching your sixth.
Mhm.
Um, what are you most proud of?
I am really proud of the reputation that the team has created in the industry. So it's like, I don't think anything makes me sort of like, glow up quite as much as when I'm out and somebody says, "Oh, I worked with Carl. I didn't even get the job, but he was so amazing to work with and he made me feel so important."
Mm.
And that was such a great experience. Or I was talking to a client a couple of weeks ago, and it happens to be a client I've worked with at two different credit unions
Mm-hmm.
now, this individual. And we've done similar services as that leader has moved. And he was sharing with me a win that's absolutely his credit union's win. But
Mm-hmm.
right now, employee engagement scores, employee engagement, it's still lower than what most organizations
Hmm.
would like.
Mm-hmm.
And in this particular case, that organization has seen record high employee satisfaction, employee engagement scores from
Mm-hmm.
their last survey. And I know the work that we've done together to support them in that journey with leadership development and inclusive workplace, and all
Mm-hmm.
of the elements that we've been able to be sort of behind the scenes alongside them, supporting them. And it's always with the goal of creating a place that people, where people want to work. And
Mm-hmm.
so to hear this credit union share with me how well they're doing from an employee engagement perspective, knowing it's, you know, 99.9% what they've done as a leadership team and how they've grown it.
Mm-hmm.
But we have that little bit of impact where we've also been alongside them and helping and coaching them. And it's that, I guess to summarize that, like what I'm
Mm-hmm.
really proud of is the fact that we built this suite of products that when a credit union uses them the way we intend, they see the results we intended, which is
Mm-hmm.
that better place to work, high engagement from the employees, high feelings of belonging from the
Mm-hmm.
employees who are there too.
Yeah, having an impact. You have made
Yeah.
an impact, right? And
Yeah.
that is always something that's exciting to have,
Yeah.
and to recognize and be recognized for. Jill, I mean,
Yeah.
that's what you are known for. You are known for coming in and really making a difference. So, it doesn't surprise me that the company you built does the same thing. So,
Thank you. Thank you.
um, I tell me a little bit about thinking about recruiting and the work that you do, to bring in key executives for credit unions. Um, If somebody if there's a senior executive out there who thinks they might be interested in being a CEO,
Mhm.
right? What would you tell them? How would you counsel them? And they say, "Hey, tell me, am I ready for it? What do I need to be? What do I need to be willing to give up in some
Mhm.
cases?" Right? What counsel would you give a senior executive who comes to you and says, John, I think I'm ready for a CEO job?
Yep. So probably, chances are, if someone thinks they're ready for it, they probably are, and they probably can take that on. But where I would, somebody who thinks they're ready for that CEO job, what
Mm-hmm.
I would make sure they're ready to do is when they start going through those interview processes, to make sure they're selective about that first CEO job they choose. And so many times I think if we get to a point where we're like, I'm ready to be a CEO, I want to be a CEO, and the opportunity comes along. I mean, there's a scarcity of positions, right? There's
Right.
not, we can't all go be CEOs. There's more
That's right.
employees than there are CEO openings. Um, and so when somebody says, "Oh, hey, I choose you, you can be our CEO," we say, hooray, this is going to be great.
Mm-hmm.
And maybe we haven't asked the board questions to make sure that we're going to work well with that board.
Mm-hmm.
And it is a special kind of challenge to have 7 or 9 or 11 or 13 bosses,
Mm-hmm.
that we, despite the fact that we've attended board meetings, despite the fact that we've attended strategic planning sessions, despite the fact that we've golfed with our board members, you don't know what it's like to work for the board until you've worked for the board. And
Mm-hmm.
so that's one of those elements that as a first, and even if you have worked for a board before, you don't know what it's like to work for this board. And
Mm-hmm.
so what I really encourage people to do is they're excited and they're ready and they want to take that first CEO job
Mm-hmm.
is figure out what kind of board you're going to work best with, and then make sure you ask those questions. Some people will do great with a rubber stamp board. Some
Mm-hmm.
people will be great CEOs for a board that says, you just tell us what to do.
Mm-hmm.
And, our job at the end of the day is to say, yep. Other CEOs will be great with a board that challenges them, that
Mm-hmm.
pushes back, that has their own ideas.
Right.
It's, there's, and most people probably want a board that speaks with one voice.
Mm-hmm.
Most people probably want a board that has some some ability to ask questions and be discerning,
Mm-hmm.
but also some level of trust that the
Yeah.
CEO is there and they're in alignment and on the same page. So really key questions for aspiring CEOs to be asking:
Mm-hmm.
explore, what how does the board disagree? How does the board come to dissent? How often does the board disagree?
Mm-hmm.
And never is not necessarily the answer you want.
Right.
But when we disagree, we walk out of the room and we talk bad about each other behind one another's back is probably also
Right.
not the answer you want on that
Right.
side of it. And so I do think, I mean, being a CEO, if you really want it, chances are the weight that comes with
Mm-hmm.
that. And if you're willing to take that weight, then I think the next thing to make sure of is that you match yourself up with a board and an organization that you're going to be successful working with.
Mm-hmm. Yeah. The process, if a credit union is because there really is a changing of the guard that's happening now, right? A generational change in leadership in credit unions, and certainly there are boards out there who are looking at a CEO who may be retiring soon and things like that. How early should they be engaged with someone like you in that recruiting process for them? Right? Do they start a year before the person retires, 18 months before it retires? What's the ideal scenario from your perspective?
I love it when we have our first conversation with the board 6 to 12 months before the CEO retires. And I think there have been a couple of times where I've worked with a board and the board says, we're pretty sure our next CEO is coming from inside, but we
Mm-hmm.
don't want to just hand the person the job.
Right.
So I love it when those credit unions reach out to us about 12 months in advance, because we're able to say, okay, do you want to just do an open national search right now where your
Mm-hmm.
internals and your externals and everybody's going at the same time? Or do you want to create a process where we vet and work with and assess these internals first. And if you are satisfied with what you have, then you move forward with the transition at this point. So maybe you have 3 C-suite executives, all of them equal level today, vying for the CEO role. The board goes through this assessment process and selects one of them. We know the current CEO is retiring in 6 months. We can elevate this person to executive vice president and have them spend the next 6 months learning alongside, backfilling their C-suite position, building the relationships that they need to out in the community, in the system, beyond that, and getting ready for that. And it saves everybody a lot of time and, frankly, a lot of heartache from going through this national search that's drawn out for maybe 12 months, where internal candidates don't know, and there's sometimes uncertainty there. There's sometimes some mystery there. There's question there about, doesn't the board trust us? Where are we in that? Versus a situation where, maybe the board knows we have to look outside for this. Yeah. Then that 6-month process is pretty good. I was talking to somebody yesterday, and they said, well, we were told if we don't start at least 12 months in advance that we're not going to be able to find somebody. And I would just say, put yourself, extend some empathy and think, if you applied for a job today, do you really want to wait until November of 2025 to start that role? Right. So much in my life changes in a 12-month time period that I'm and so to me, I'm if we spend 12 months on a search, that's probably a little bit too long. And even to the extent that if we're setting out today who we're looking for a year from now, I don't know, if you set out your ideal candidate profile in December of 2019 with the expectation you were going to bring that person in November of 2020, probably not.
The world could be different by then.
Yeah. So I do think that, and it can be, I can start working with the board. We can put a lot of elements in place for that. But really, when it comes down to the posting and the recruiting and the screening and thinking about how long a candidate would ideally like to wait between applying for a job and starting that job, I think it's a much shorter window than we've historically said in the space.
In addition to CEO, what are other kinds of roles that you assist credit unions in attracting?
So our sweet spot, and this goes back to lessons you learn along the way. So our sweet spot we've identified is anything that's really director level and above in the organization. So it doesn't have to be executive level, but it should be roles that we're really looking for maybe 5 years of experience or more in that. And part of that, I think, ties to just where our networks and our assessment skills as professionals are. Everyone who works at Humanity has spent time working in credit unions as well, at various roles through the credit union, from management level through CEO level in credit unions. And so with that, I think it's given us a really good ability to assess the right kind of talent that'll come in and grow in those leadership positions and be in those roles.
How has work from home changed the types of characteristics of the employees that people are looking for?
That's interesting about the characteristics. I think what's changed on work from home is stuff that many of us have said, oh, we probably shouldn't have really been doing it that way anyway. So people might say now, well, if it's a work from home person, we have to be able to hold them accountable for their results and not their actions. We have to be able to, they have to be clear communicators. We have to be able to clearly communicate with them. Well, those things are all true too if somebody's in your office. But if you're a manager who is, you can see somebody sitting at their desk versus you don't see someone sitting at your desk. Sometimes it's easier to say, oh, well, but I can tell that person's working really hard. Okay, but they haven't hit their goal in 18 months. Is it just because you see them sitting at their desk doesn't you should still hold them accountable for the results, because maybe they don't have the resources they need to excel or to succeed. We should have still always been looking for results-oriented employees who are accountable. we as leaders should always feel like we are communicating clearly and that we're hearing that back from them. But I think that it has become non-negotiable if the employee is not in the same shared physical space from them.
I think there's sometimes can be a difference between the profile of the individual that maybe large credit unions are recruiting for versus smaller credit unions. Is there a difference in your mind or in your experience of kind of the skill sets? Like, are large credit unions looking more outside the industry while smaller credit unions are looking inside the industry? Is there any distinguishing difference between the two?
Yeah, it's funny. I have said several times over the course of my career that the job in the credit union space that I am least qualified to do is to be the CEO of a credit union under about 50 million in assets. Because that is a role where the CEO of that credit union has to do everything. They have to do compliance. They have to sometimes work the teller line. They have to write the strategic plan. And they also have to shovel snow or rake leaves or something. It comes down to it. And I'm like, oh, so, it's not, they can't just be hands-on, but they can't just be strategic. And so small credit unions are really, it's really a unique individual who's going to come in and excel in a small credit union. And when I was the CEO at the league in Connecticut, my median staff size of credit unions, so I had 100 credit unions, half of those credit unions had 6 or fewer employees. It's just whoever you are in that organization, you can't hide from the need to do your job. You can't just put your head down and mind your own business. Everyone in that organization has to be cross-trained, has to be capable, has to be able to connect dots. And so I think oftentimes those employees who are coming from smaller credit unions, 250 million and less, I think large credit unions would be really lucky to have that flexibility, that agility that they bring. And so often I hear large credit unions say, oh, well, the person has to have experience working in a credit union at least as large as ours, with some expectation that individual will have more sophistication or more knowledge, when sometimes what that individual has is much deeper knowledge in their silo. I am an expert in cards management. But I don't know how the cards management work I'm doing is impacting the overall net income of the organization on it, because I'm just and so that's an interesting. I think that we often will talk to folks from larger credit unions who are saying, oh, well, we need this we need these skills that can only be built if you're here. And so, for example, one that I've heard that I think is a great skill, and I think we absolutely should require it, is resilience. We need leaders with some resilience. I think that is a trait that if you're one of 10 employees at a $150 million credit union and you're keeping that credit union growing and thriving, you've established some resilience. You've built up that skill set, right? And so I don't know if I'm still answering the question you asked,
you answered a question that I was very interested in, right? Even if I didn't ask it, because here's why. I do think that flow from larger credit unions to smaller credit unions, right, and smaller credit unions to large, what are the relative benefits of both of those, right? And you couldn't be more on point. When I moved from Navy Federal to Coastal, it was like night and day, right?
Oh yeah,
you weren't allowed to do anything at Navy because there was somebody whose
somebody else already has that job.
Right? I once asked for a database, and I was like, can I get the database software? And they sent me a database person, and they said, what would you like? Right?
Yeah.
Right. Let me go build it for you. And,
yeah.
You go to a $2 billion credit union down from that, and it's like, here's all the software. What do you want to do with it? Right. Kind of thing. So it is very, very different. And you
go to a $200 million credit union and you ask for that, and they say, go ahead and build it. What kind of resources do you need?
Yes.
And now I'm the database manager.
This is true in fintechs too. I've seen folks move down from very large kind of multinational, publicly traded, Fortune 500 companies to fintechs. And they're like, where's the 7th floor full of project managers and marketing people? It's like, no, that's you.
Manage your own project.
That's right. That's exactly right. That's exactly right. Well, Jill, I can't tell you, this has been a ton of fun. You have been so gracious with your time to join us today. I really do appreciate it. Thank you very much for joining us. If somebody is interested in learning more about Humanity and how the services that you provide, that they could help their credit union or maybe their fintech, as I was saying,
Yeah.
How do they reach out to you?
Email is great. I'm Jill@humanity.com. And we have a website that highlights the services too at humanity.com. And there's a request more information button on that people can reach out to us from there as well.
That's awesome. That's awesome. Please, everybody reach out to her. She knows what she's doing. She'll get you the leader you need. She'll help train up your team. Jill, thank you so much for joining us.
Thank you, Kris.
This podcast is sponsored by Constellation. We're empowering community financial institutions with innovative digital solutions, powered by Fintech, driven by your roadmap. Join us as we navigate the future of digital banking together. For more information on how we can be your partner for digital transformation, visit www.constellation.coop.
What a wonderful conversation with Jill. Thank you so much for joining us today. If you like the content, please like and subscribe on your platform of choice. Be sure to check out our LinkedIn group for extra content, and we will see you next time.